Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great Thanksgiving week. Market-wise, let's take a look at it out here. We have the Dow Industrials down 10, Nasdaq's up 34, S&Ps are up 4, gold contract flat at $1,197 an ounce, silver up 4 cents at $16.43 an ounce, platinum down 23 at $12.0540 an ounce, copper down 3.5 pennies at $2.99 a pound. Light sweet crude off 79 cents, trading at $75.71 a barrel. Bonds, we have the 10-year up 3 ticks, 126.25. 30-year is up 3 at 142.03. Both cases, the 10 and the 30, they rejected lower price once again. Bottom line, these bonds want to go higher. King dollar. Down 205 ticks, trading out at 88.20. King dollar made it up to the 88.58 mark today. That 2010 high, folks, is the 88.88. Euro down, up 46 ticks at 124.38. The yen is up 48, trading at 118.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get that high that's out there on Friday, 2071.46. It's going to get tested. You know, we get a holiday week out here, folks. It's going to be low volume, sideways market, but what we did have on Friday at option expiration, that high has volume up there, so that's going to be tested at 2071.46. Going to the Dow Industrials, the same setup in the Dow Industrials. That little baby wants to get tested. The Dow high, spike high out here was 894, 17,894. We made it to 793 today. NASDAQ Composite. Now, the composite itself is going to give us a lot of information out here. The reason being is that the composite is trying to test the high right as we're speaking right now. The composite high is 4751. We've hit 4750.92. Volume out here today is anemic, and that's what they expect for holiday week, no doubt. Bottom line, though, that baby does want to get tested. If we go to the SPY, the SPY, we take a look at the SPY. The SPY, we're at 207.09. That test in the SPY would be 207.84. NDX 100, we take a look at the NDX 100, the 3 Qs. We'll use the 3 Qs. That high that was generated out there on Friday was 104.69, and we've hit 104.68. I'd like to see it actually hit it right now, because when you actually hit the number, that is the ultimate test, folks. Gold contract. We go over to gold. We take a look at gold. What we have with gold is this. Gold looks to be building cause, folks, to try to get up and into the swing point from the October 21st level. That swing point is 1,255.60. Right now, we're at 1197. We've had sideways movement out here today. The low is 1192. The high is 1203. Bottom line is that you're building cause to get up and to test that level. You know, what we will see is that you're inside the larger range right now. So how it comes into that level is going to be crucial. The XAU, the HUI, they're both held up well. They've built cause, 3 separate signs of strength coming into the market the last few weeks. Oil. Let's go take a look at the oil market. What we have with oil out here is this. Oil continues to basically build cause for lower price. We take a look at this oil market out here today. You have natural gas down 2.6%. The gasoline's off 1%. Oil is off 1% also. We're trading out at the 75-71 area. And what I expect you're going to see, once again, it's going to go after these swing lows out here. And we'll see how she handles the 73.22. It looks like 70 bucks wants to get hit once again. You know, what you had on Friday is that you had a small counter trend bounce on Friday. Didn't have the juice, gave it up on price. What you do have today is that you're coming down on lighter volume. So the expansion, I suspect that we're going to go test that swing low, which is 73.22. We've done 175,000 contracts today. Now, the swing low has really low volume. See, I'm going to take the prior day. It's still only 190,000 contracts, so it doesn't need a lot of contracts to get into this $70 level. Bonds. The ever-ready bond market, folks, just continues to reject lower price. with lighter volume, and bonds, bottom line, refuse to give it up. We're at 126.25 in the bond market. That's the 10-year. The low of the high on October 15th was 127.04. This wants to go after this 130.17 mark. And this is going to be really bizarre because I can tell you last Friday, what you had in the bond market also was a rejection of lower price when, in fact, the market gapped away. That's really unusual. When you get a gap away market, folks, S&P's gap higher. Now, they certainly didn't hold their highs, but they gapped higher in the open. The bond market still didn't sell off, which is absolutely amazing. 30-year bond, we're at 142.03, and 142.13 is the low of the high. So the 30-year bond continues to lead the 10-year into higher price. When you actually look at the yield structures inside them, the 10-year right now is running at 2.30. So that is saying quite a bit. And that specifically what it's saying is that these S&Ps want to basically back down. And I don't expect we're going to see that back down in a holiday week. This is a week where you have a couple different things end up happening. You have the holiday week happening, number one. You have the snowstorm coming in that's going to slow things down even more dramatically on the Northeast. So in that aspect there, what I expect you're going to see is a sideways move. And we have the end of the month coming. King Dollar. What King Dollar did out here today, King Dollar got to a price point of 88.51. Then gave up a couple hundred ticks. And that couple hundred ticks is no big deal. Bottom line is that it's 88.88. That is the high. I'd love to see that high just get ticked off. The reason being we've been so close to it for such a long period of time that it looks like, you know what, little by little it's going to crawl up to that area. We'll see how it happens, but it's 88.80. And what we had out here today is 88.51. Our phone number is 877-927-6648. We go take a look at the XLE. So inside the XLE out here today, pulling back slightly. You're down 84. ExxonMobil, however, different animal. And ExxonMobil is the largest weighting inside there. Exxon's down 133. Not that that's a lot. It's only 1%. But what you have is that it couldn't hold the swing point last Friday. Last Friday, the high in Exxon last Friday was 97.20. It did 12.3 million shares. It was going into the 97.10, and it couldn't hold it. Bottom line, you can't hold it. First thing it's going to do is test a lower swing at 93.83, and if you get volume at that particular point, you're going to see lower price. Some of the high volume stocks in this low volume market out here today, you have Apple's up $1.84. You got Marvell down 61. Let's see, Verizon Communication is off 84. You have Gilead Science down 24. If we go over to the IBB is going to be interesting in the context of watching the NASDAQ. Why? The IBB, folks, okay, is coming up, testing its high. The low of the high is 295.30. The high is 302. We're into the 295.30 right now, or 299. That is saying it's going to test the high, and we're doing this with 900,000 versus 1.7 million. So the IBB is going to go after that in the next few days, and we'll see if, in fact, it can hold and/or does it give it up. The XLF, we go over the financials. We take a look at the financials. What we have with the financials, the XLF in particular is that XLF got over the 24.31 level. We're at 24.34 right now. We're doing that with 11 million shares versus 38 million. So the XLF has shown that it's having a very tough time getting to higher price, and what it has had a few separate days is that the volume is just absolutely anemic. Now, let's go to the Russell 2000. The Russell 2000 is the only indice thus far that hasn't been able to get up into its highs. What we had last Friday, which was just amazing, is that you got to a price point, you opened at 1184, and then you closed at 1172. It couldn't even get to its swing point from the 13th of November. That says, flat out, that you have divergence number one. The Russell 2000 is the weakest index. You stay right there, folks. We're coming right back. 877-927-6648. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You have the Dow Industrials down 15, Nasdaq's up 33, S&Ps are up 3. Let's go to Suzanne in Canada. Hey, Suzanne, what's going on?
Hello.
Hi, how are you?
Good, how are you?
Good, thanks.
It's nice to listen to you.
Well, thanks so much. I appreciate you calling.
Tom, I would like to ask you, is this a good entry point for GDX?
Let's take a look. So the GDX...
NUGT. I would trade NUGT.
And NUGT, okay. If we start off with the GDX, that's the Market Vectors Gold Miners Trust. The low for the year out here is $16.45. The high is $28. And, you know, when we take a look at inside of this, folks, the largest weighting structure is Gold Corp. Then you have Barrick, Newmont, Franco-Nevada. So what does happen, Suzanne, just so you understand out of this, you know, Barrick and Newmont basically are pretty dogs, but that's 19% of it. You know, Gold Corp's cool, Franco-Nevada, Silver Wheat, and the rest of them are pretty strong. When we take a look at this, what I would do is this. My take is that, yeah, we're off the bottom, and the GDX wants to go to $22. Now that you don't own it, what I would do is I'd try to get an entry. You're at 1959. I'm splitting hairs here, but maybe 1918, right in there, because then you can put a stop under 1754.
1754 stop.
Yeah. Yeah.
Thank you very much.
Okay. Have a great one. Have a safe one. Oh, I know. If NUGT, right? Are you still there? No. Okay. So she was looking for the NUGT also. NUGT, folks, is the Direction Gold Miners Bull, the 300% bull position of the actual gold contract. Now, if you're looking, now this vehicle here, it's important to understand that's a daily investment vehicle. That's crucial to understand. So in this particular case is that you're at $14.95. My take on this, the buy is like $13.60. You know, and what does happen, just so you understand, is that the NUGT is not a vehicle to hold even if you think gold is going up. It's a daily investment vehicle. You can come over to our website at TFNN, and when you do that, at the very top, you're going to see it says ETFs. There's 3 white papers that are really well done, and they explain leveraged ETFs, okay? Because what happens is this, folks, is that they compound numbers on the way up, they get defensive on the way down, and the crucial part is that they're daily investment vehicles. What does happen is this, and this is why people, no doubt, you know, when they call up and they want to trade them, whether it's up or down, if you catch a trend, then you have an expansion of price, whether up on the way up or the way down. And they will double, well, if it's a triple, they'll triple every day, maybe a little more. If it's a double, they'll double every day, and up or down. What happens where both the bull or bear position can lose money is in a market that goes sideways. That's crucial to understand if, in fact, you're going to basically trade any of the Pro shares or any of the Direction shares products. Some of the Dow stocks out here today, you got, let's see, Marbell's down 61 cents. You get Exxon off $1.30. Oxy is up 65 cents. You get Big Blue up 124. If we go over to Big Blue for a second, Big Blue's having a huge time, folks, getting off the floor. Just can't handle it. Someone keeps selling into this. That is even with Big Blue buying huge amounts of stock back. It got to 163.86 today. Someone sold right into it. Friday, market's up. The market was gapping up Friday morning by over 20 points, and Big Blue still couldn't get anywhere. Big Blue has some huge problems. Okay, when we take a look at this equity, right now you're trading at that 162, and that's building cause that, you know, trying to first off get down to this 157. On a monthly basis, we're broken down with big volume, which can make the case that Big Blue wants to run down to 133. And that, in fact, will be a very large hit to the Dow Industrials, because Big Blue still is the largest weighting structure inside the Dow Industrials, point-wise. If we talk about the Dow right now as to what's taken away from it out here today, you got Marbell bringing it down 61 cents. Verizon is off 81. United Technologies, they're changing CEOs out. That's down $1.72. ExxonMobil's 129. Putting juice into it is that you have Intel up 65 cents after giving it up on Friday. Disney's up $1.60. You have Boeing up 168, and Big Blue is up 121. Inside the NDX 100, which is putting juice into it, you have CLAC, KLAC, KLA 10 core. That's up 218. Illumina is up 484. That's a biotech. We have Charter Communications up 367 at 164, and Celgene, which is another biotech, that's up 246 at 110.66. Taken away from the NDX 100, you have Green Mountain down 233. Autodesk is off 81. You have Mattel flat, which is pretty interesting coming into Christmas time. That's really unusual. If we go over to Green Mountain just for a second, we do take a look at how Green Mountain is trading. So Green Mountain came out with numbers last week, come off its high with volume, and that's saying that she's going to start going after this lower gap. There's a lower gap out here at 118. You're at 138 right now, and it looks like she will come after that gap. If we go take a look at CLAC, who's the largest runner today inside the NDX 100, that is taking its highs out with volume. Now, that's very impressive because the fact is that we have light volume in the marketplace out here. We take a look at this at a weekly basis. On a daily basis, it's taken out with volume. On a weekly basis, it's also looks like it's going to have some juice behind the move. We're dealing with 31 million shares. Oh, actually, hold it. No, is that 3.1 million? Hope it's 3.1. It's 3.3. You're dealing with 500,000. That's going to be close. On the weekly, it's going to be close. The daily, no doubt, is getting up into those highs with some juice behind it. If we go over to the XAU, we take a look at the XAU. What we have with the XAU is this. Backing down, has some sideways price move out today with light volume. The XAU had come off the bottom with real good juice, come off the bottom with 42 million shares, turned around on the 14th at 44 million shares, then pushed into its highs on the 18th with 43 million shares. You back down with 20 million. That's what you're going to be. That's what you're looking for performance on the top side. HUI, same type of setup. HUI right now is at 173. That also came off the bottom with some juice. On November 7th, we had 30 million shares. On the 14th, you had 31 million. And on the 18th of November, we had 30 million. Then we backed down with 19 million. That's what you want to see, okay, when you are backing down. You want to see wide price spread on the way up. You want to see a pullback, and that pullback you want to see with lighter volume on the way back down. When we come back at the end of this break, we're going to have our man, Mr. Greg Johnson. Many of you Tigers have listened to Greg before. Greg is the president and CEO of Well Green Platinum Limited. Okay, it's a mineral exploration company that's doing business in Yukon. So we're going to talk to him and see how the mineral business is doing, number one, and specifically what is happening with Well Green and what's happening in the platinum, palladium, and nickel market. This is Tom O'Brien. This is TFNN. Dow Industrials right now down 7. Nasdaq's up 35. S&Ps are up 3.5. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we have the Dow Industrials right now down 7. You get NASDAQ up 37. S&Ps are up 3. And right now, folks, we're going to go over to our man, Mr. Greg Johnson. Greg is the president and CEO of Wellgreen Platinum, folks. Wellgreen is a mineral exploration company, does business in the Yukon. And when we're talking platinum, you're talking palladium. And he also has a nickel inside this project. Many of you have known Greg. He's been on here many times, and it's just great to welcome Greg back to TFNN. Hey, Greg, how you doing?
Hey, doing great, Tom. It's great to be back on your show.
It's great to hear from you, man. So tell us, well, first off, it's kind of intriguing because the platinum market, the gold market's flat today. The platinum is down a bit. But you get a little bump up in your stock. So first off, tell us what your new company is all about, Wellgreen Platinum.
Yeah, this is a pretty exciting story, similar to my two previous mining companies, Nova Gold and South American Silver. We've got a very large asset. It's now close to 20 million ounces of platinum and palladium, a little bit of gold.
Okay.
That comes along with an equivalent of another 20 million ounces of nickel and copper. So it's a giant. It's as big as the Donlin Creek project for NovaGold. In the Yukon Territory, right next to an existing paved highway. We've raised about $35 million over the last 2 years, quietly doing our work in a really tough resource market, doubling the size of the resource and really refining our understanding on the engineering. And the market's just starting to recognize that. We just completed a $9.1 million financing late last week at a premium to market. So we're starting to get smart guys focused in our sector who are paying attention. And this is a story that the people, need to take a look at here.
And in this environment, folks, okay, it is really tough in the mineral space to raise money, period. The symbol is a WG when you're taking a look at it. So, first off, congratulations, because we've seen plenty of people. Well, listen, the industry in general is really tough right now. There's no doubt. Now, this is an open pit mine, right?
Yeah, so what's particularly unusual, we've talked in the past, Tom, about the other projects I've been involved with in the gold space, and the silver space, and those were open pit operations as well. But in the platinum and nickel space, 95% of the world's production are from deep undergrounds in southern Africa or Russia. And so, it's quite unusual to have the right kind of geology right at the surface where you can, extract this material from an open pit. And so that's what makes the Wellgreen project so exciting, that and the fact that it's in Canada, not in a high political risk country.
Sure.
And so, we put together a team here that we've spent our careers working for the major mining companies, working in the north. John Sagman, our chief operating officer, spent 30 years in the industry, 20 years with Xstrata and Vale, the two giant mining companies up in eastern Canada, building and operating PGM nickel mines like Wellgreen. So he's just a great fit. We've engaged some of the top experts in platinum group metals and nickel to assist us with this compilation of historic data on this project. This project was discovered back in the 1950s when they were building the Alaska Highway up through Canada, and they opened up the exploration in this area. It was put into production briefly in the 1970s by one of Canada's mid-sized copper producers. And then, since the late 80s, it's basically been looked at as its open pit potential, with Wellgreen really, picking this up and running with it over the last couple of years.
Now, Greg, how does it work? So inside the mine, you're looking at a mineral, platinum, you're looking at palladium. Talk to me about the nickel, and how does nickel come into play, and what is, I believe nickel's, is nickel in batteries, right? Is that right? No,
Nickel's
that's zinc.
Batteries, it's a hardener in steel. It's a real
hardener in steel. Okay, right.
Metal. So nickel is similar in many ways in terms of a market to that of copper, but it's about 1/10 the size. So in many ways, nickel is to the copper market what silver is to the gold market. It's much more volatile, and the bull markets as well as the bear markets can be extreme in nickel, but highly profitable. And our project, Tom, similar to projects that your listeners may be familiar with in the copper space, where it's a large intrusion-hosted deposit, disseminated mineralization, in other words, it's spread evenly throughout the entire ore body.
Yes.
Very appropriate for an open pit type mining operation. But instead of being copper or copper and gold, we're looking at platinum, palladium and gold, and nickel and copper. And they all get mined together. They all co-occur.
Okay.
And we use a simple process called flotation to separate the metals from the rock and then produce a concentrate that's then shipped off to a smelter for processing. So our capital costs are modest. Our operating costs are going to be some of the lowest in the industry. And this is going to be, a real heck of a project.
Now, I know that up in Alaska, you would basically, a lot of these minerals are basically in native nations. So up in the Yukon, I believe they're called First Nations, right?
Yeah,
So,
the people in this area are called First Nation. These are the native people.
Yes.
We are in an area that we're working closely with a group called the Kluane First Nation. They're very entrepreneurial and are been incredible supporters of the project. This is the opportunity for them to really build a local economy They're working closely with the company. An example is they're providing us many of their wildlife studies that have been completed over the decades to aid the permitting process, and we see them as real partners in this venture.
Getting platinum out of the ground, my understanding is getting platinum out of the ore is very tough to do. So how does this work with an open pit mine? I mean, do you just commit and then talk to me how that platinum comes out of the ore, Greg?
Yeah, so actually it's very similar to many copper deposits in that the metal-bearing minerals are spread. They're the highest concentration in certain horizons near the bottom of this. It's like a tabular body, several hundreds and hundreds of feet thick and hundreds of feet deep.
Okay.
It continues for about 2.5 kilometers, about 1.5 miles along the surface. And so what we do is we mine this material, we crush it very finely, we put it into tanks where we add some certain reagents, and we'll be able to separate out the metal very easily from the rock material, dry that concentrate material, then we ship it off to a smelter for processing. So it's actually it's a fairly straightforward. The tough part, Tom, is finding one of these big deposits. It's not so difficult to process.
Okay.
We're using very conventional processing, the same they're using in South Africa or Russia or up in northern Canada. So it's pretty well understood technology. At the end of the day, mining is a pretty straightforward business. The challenge is finding a deposit that's big enough and high enough concentration of metal to be really exciting and interesting to the major mining companies.
Now you must feel really good that you are not out in the middle of nowhere this time, right? I mean, most minerals are in the middle of nowhere. We know that. I mean, West Africa right now has the best gold out there, but getting it in is a whole different ballgame. So geographically, let the people know geographically just how close you actually are.
Yeah, so you're right, Tom. Most of the big deposits that are being found today are occurring in really remote locations in the far north, or as you said, in opening up countries in Africa or other jurisdictions. The Yukon its industry is primarily mining, has a little bit of tourism, but no significant other industry.
Okay.
And we're right next to a paved highway on this project with an existing port that is shipping concentrates from both 2 other operating mines that are in the area. So this is an area where, yes, it's sparsely populated, but you've got all the infrastructure necessary to make a low-cost capital investment and operating cost project that should be quite robust. Now,
what's so intriguing, I mean, the amazing part, Greg, right now, platinum normally trades a couple $100 over gold, and you know that I trade a lot, and we trade a lot, and so I've been telling people that, listen, if you're going to buy gold coins, you might as well buy platinum coins right now, because the differential when it goes back to the mean, platinum is much harder to get and is more valuable because of the fact that platinum is used to take poison out of the air. So it's intriguing that. How did you find the mine?
Yeah, so 2 points that you make. Unlike gold, platinum has a very strong industrial demand, platinum and palladium. So the single biggest use for platinum and palladium is catalytic converters for both gasoline and diesel engines. So, fascinating fundamentals here in this market, where basically we've been seeing about 4 to 5% annual growth, and it's been almost a straight line. And up until 2006 for platinum and 2004 for palladium, the mining industry was increasing supply along with that increasing demand.
Okay.
Last 8 to 10 years, supply has been falling for platinum out of South Africa and for palladium out of Russia. And so you've got this amazing, almost perfect storm for metal prices to rise of the fact that demand continues to go up while mining supply continues to fall. And so the world is going to need deposits like Wellgreen that are outside of those high political risk jurisdictions that come on stream just to meet this rising demand. Because our project occurs right at the surface, in the 1950s, prospectors looking in this area were able to identify it. And then, as is often the case, a number of companies have worked on it since that period to get to the point where we are today, where we have what looks like a world-class prospect.
Hold that thought. We're coming right back, Greg, okay?
Okay, thanks.
Awesome, man. Stay right there, folks. Stay right there. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Guest today is Greg Johnson. Greg is the president and CEO of Wellgreen Platinum, folks. Their website is wellgreenplatinum.com. They trade in Canada under the symbol WG. They trade in the United States in the symbol WGPLF. We're talking with Greg right now. Greg, it's pretty amazing that in the whole world, gold, silver, platinum just happens to be so precious. Why? And of course, I guess one of the largest questions is, why do you think that mine was just laying up there for so long and people weren't going after it?
Well, the thing about platinum deposits is that they are incredibly rare.
Yes.
They only occur in a few regions globally.
Okay.
Most prominent being South Africa.
Yes.
Zimbabwe has some deposits. Russia. There's a belt in the Sudbury district of Canada, eastern Canada, and then up in northern Quebec. And it happens to be that there's also a belt of these very rare rocks. They're from deep in the Earth's crust, so they don't occur very many places globally. But there happens to be another sizable belt that extends from northern British Columbia up through the Yukon and into Alaska. And Wellgreen is the most advanced of those deposits. And it was put into production in the 1970s. But their model was focused on very high-grade material as opposed to taking a large-scale, bulk mineable approach, which we're doing today.
And which is, I guess, what also happens. Palladium itself has really, taken off. I mean, palladium used to average about $250. Now you're dealing with about $600, $700, right, per ounce.
Yeah, and some analysts, because palladium is the dominant metal used in gasoline engines.
Yes.
You've got about 75% of the vehicles in North America are gasoline versus diesel.
Okay.
And Asia and India look like they're about a similar ratio. So some analysts are more bullish on palladium than platinum, actually projecting them to become parity in pricing, which would be very bullish indeed for palladium, because right now palladium is about half the price of platinum, roughly.
Right. And I know, mines in general take a long time to get up and going. Where are you in the structure, in the mining structure, meaning on a timeline here?
Yeah, so based on our current work that we're doing, we've been doing the drilling and the engineering over the last 2 years to bring the project to the second engineering study that'll be updated by the end of this year.
Yes.
Next year, we're going to go to what's called the pre-feasibility level.
Okay.
And then in 2016, so 2 years away, we'll be at feasibility, which is the point at which you have a high enough degree of confidence in your initial investment size as well as the operating cost to get a bank to finance you. So in 2 years, we hope to be basically finishing our permitting process and be in a position to start construction as early as 2017. So that's quite rapid pace for a project of this scale.
No doubt. Folks, it's Wellgreen Platinum. I'm Mr. Greg Johnson. We will definitely have him back. Hey, listen, man, congratulations, because, this has been a wild ride, no doubt. The first time I met you, think about this, we're going back 11 years now, right? And it's like, oh, my God. You talk about minerals in general, going up dramatically, coming back. It's kind of like, my own take on it is that, we've made a bottom here, but it is cyclical, no doubt. That's why I guess they call a commodity, right?
Yeah, no, I mean, it's been interesting, as you say, over the last 10, 15 years to watch the cycle unfold, where there was incredible wealth creation from the deep, dark days of 99, 2001, when people were saying gold was going to go to zero. Well, it didn't go to zero. In fact, it went to $1,900 an ounce.
Right.
It was quite a ride, and the other metals went along with that in parallel. And now we've gone through the big 2008 crash, a rebound, and then a quiet but as deep crash since 2011.
Yeah. Right.
Most of these companies have been taken down 90, 95% in value, and yet the assets are still there. And so the opportunity today in the market to pick up high-quality names, those companies that have quality assets that have been able to finance, coming into this next market cycle, I think is huge. I think it's like the 1999-2001 type bottom, and I think there's a chance here that we're going to see some huge gains over the next couple of years in this sector.
Yeah, no, listen, you deserve a pat on the shoulder for getting that type of financing up and going, getting that mine going. There's no doubt. Folks, what does happen in this business right now, okay? It is so hard to raise money in the mining business. The money is everywhere. We know the free money is out there, but in the mining business, it's not. So how much did you raise thus far?
So we've raised about $18.5 million in 2014. PricewaterhouseCoopers just published a study on the junior mining space in Canada that said only 26 out of 1,700 junior mining companies were able to raise $10 million or more in 2014.
Yeah,
that's how tough the market has been.
There's no doubt. There's no doubt. Well, listen, man, we appreciate the update. Look forward to having you on again, and just go get it, man.
Well, we've got an exciting story that's going to be unfolding, Tom, so it'll be great to providing you updates along the way over the next couple of months and into next year.
Awesome. Have a great one, Greg. Have a safe one, man.
Thanks a lot. Take care.
Now, you guys have a different Thanksgiving, right?
Yeah, we have our Thanksgiving in October, but, I'm originally from the States. So,
that's right. That's Happy Thanksgiving. That's right.
Yeah, you too, Tom. Take care.
Okay, man. Have a great one. Have a safe one.
Yeah.
That's our man, Mr. Greg Johnson. And the stock, again, folks, is Wellgreen Platinum. It trades in Toronto as WG, trades in the United States as WGPLF. Market-wise out here, let's take a look at it. You get 3 minutes coming into the close. Dow's up 6, Nasdaq's up 40. And let's go to the Nasdaq, because the Nasdaq, no doubt, looks like we're going to be up at those highs. And it looks like it's going to close at those highs. So closing at the highs means what? You can go to higher price. High on Friday out here was the 51, and we're at 53 right now. So bottom line, Nasdaq is getting up and over those highs. Holiday week, so the holiday week, the way this holiday week is going to be shaken out too, by the way, folks, okay, is that Friday is a half a day, goes to 1 o'clock. Wednesday will be slow. What I expect, what you're also going to have is that storm is going to come in on Wednesday. So that in itself is going to slow things down more dramatically. After the close out here in the next segment, and number-wise, we got a few numbers that are going to be coming out with you. There's not really a lot of curveballs out here on the next few days. The biggest curveball, more than likely, is that just came across the tape that the grand jury from Ferguson is going to be coming in. So that, we'll see how that whole decision does shake out. Dow Industrials right now are up 9, Nasdaq's up 42, S&Ps are up 6.5. You stay right there, folks. We'll be coming right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great Thanksgiving week, folks. This quote is by Richard Bach. To bring anything into your life, imagine that it's already there. Market-wise, let's take a look at it out here. We had the Dow Industrials up 7, Nasdaq up 41. Nasdaq's at a new high. S&P's up 5.5. You get the gold contract flat at $1,196. Silver up 4 cents at $16.43. Platinum down 23 at $1,204 an ounce. Copper down 3.5 cents. Trading out at barrel bonds. We have the 10-year and the 30-year, both rejecting lower price, moving higher once again. 10 years up 4 ticks at 126.26. 30 years up 5 at 142.05. King dollar tried to get into its high today from 2010. We hit 88.51. That high is 88.80. Then gave it up off that level, come down 215 ticks. We are at 88.19. I expect you're going to see that dollar. That dollar's going to whack and test out that 2010 high. Euro up 49 ticks at 124.40. The yen up 47. Our phone number is 877-927-6648. Your world. In the world of the S&Ps, let's take a look at them. Cash S&P right now, you're at 2069. The high of Friday was 2071. That's going to get tested. Dow Industrial, same setup. What you have is the sideways market in the Dow out here today. You're up $7. The high of last Friday was 894. That's 17,894. That also wants to get tested. Now, the NASDAQ composite, you're over the high. The NASDAQ composite goes into the level, takes it out. Volume was lighter, but what we did, we take a look at the SPY. What they have with the SPY is that the SPY right now is at 207.26. The high generated on Friday was at 207.84. That's going to get tested. The Qs, same setup. Actually, the Qs are probably over the high right now. Yeah, the Qs are at 104.69, and the high, they can push this thing higher. You got Tuesday, tomorrow will be basically a decent volume day. Wednesday is going to be nil. That storm's going to throw havoc into the airline travel system for sure. It'll throw havoc into the driving system in parts of the Midwest and the Northeast. The Northeast looks like it's going to get, it's only 3 to 4 inches, but 3 to 4 inches coming in on the Wednesday prior to Thanksgiving is a big deal. Gold market. What do we have with gold? Gold is building cars, folks, for higher price. The way gold is trading out here right now. And what you have specifically is this. And this is what's pretty cool. You had the dollar index today. Well, let's talk about Friday. Friday had the highs. Friday you had the S&P open up 20 points. They couldn't whack gold down. This morning, you still had a flat gold market with the Dow, with the dollar index at highs. That's a good situation for gold. Why? Because what you had there is that with the dollar getting strength going after that high, you'd expect that gold get whacked down again. Bottom line, it didn't. What is that saying? That's saying that the dollar just wants to test its highs, and gold, I suspect, wants to go higher after having 2 or 3 separate signs of strength coming off of the bottom. The bond market continued. Well, actually, let's go to silver for next. If we take a look at the silver market, what we have with silver is this. Silver is trading at $16.43. What silver is doing, silver is building cars to get back inside the larger range. Now, gold is inside that range. Silver has to get up another 40 cents. It has to get into the 1685 level in order to get it. Now, I expect it's going to. Why? Because we've had 3 separate signs of strength on silver, including last Friday. Last Friday was pretty impressive, actually. Silver didn't hold price, but it went to 1660. It closed out at 1639 and it traded as low as 1604. But you were pushing with juice behind that move. It had 73,000 contracts pushing it to higher price. So I expect silver's going to get up to this 1784 level. If it gets to that level, then you're going to have action in the silver market to 1946, which is a big number. The bond market continues to want higher price, lower yield. The 10 years right now are going at 2.29, and what that's going to continue to do is housing stocks. You get Lanao is up 22 cents out. They had a nice wide price spread. They had an accelerated volume. These housing stocks want to go higher. As I said with King Dollar, if you look at King Dollar, what I'd love to see is a full test of the 68.88 area. Why? Because if that's what you get, then you know that it actually has tested it. What we have had thus far is that it's crawled up this 88.51. It'd be great to have this 88.80 tested. That's what it's been trying to do, this move, and what happens, folks, inside the currency moves is that they trend for long periods of time. I mean, when I talk a long period of time, you're talking months. If we talk about the last 7 years, actually the last 9 years, what you'll see is this. From 2005, we're at 92, trended down till 2008 at 7. Going to be going for quite some time. If we go over and we take a look at the euro, because that's the 60% correlation inside it, the euro is actually staying in its range. It got outside of its range this morning. It got down to a low of 123.60, which got underneath that range. It basically started clawing its way back, and we're right at the bottom of the range it's been trading in since November 3rd. You know, if it gets needs a little bit more strength, because this has been a one-way ride for the euro from 137 all the way down to this 124 level. What we do have in the gold market, and this is going to be a wild card in a huge way. Andy had brought this up when I was interviewing him on my show last week, is the Swiss vote. The Swiss vote, folks, is a big deal. It's coming on the end of this month, and what the Swiss vote is all about is the citizens of Switzerland are voting that the Bank of Switzerland will have to keep more reserves in gold versus euros. What has happened, now this is what has happened, and this is pretty intense watching how this is shaken out. So if we go back to before the euro was in place, or even when the euro was in place, and this is all public records, folks, because I watch this when I'm basically writing the gold report as to where everything is shaken out. Because it has a lot to do with the dollar. Because if you remember, in 2002, 3, 4, 5, they thought the dollar was going to hell in a handbasket, not the reserve currency, all of the above. Well, factually, what happens is that the central banks publish how many dollars they hold, how many euros they hold, what are the currencies they hold. So you can get a decent grasp on, is that trend going higher or lower inside. So what had happened when the euro came out is that there's no doubt they were holding more euros, less dollars, kept the gold around the same amount. In fact, they have kept the same amount. What has happened now inside the citizens of Switzerland and the Bank of Switzerland, the Bank of Switzerland is basically a government bank. So what has happened there is that the citizens of Switzerland said, guess what, hell in a handbag. You're holding way too many euros. We want you to hold the same percentage in gold as you're holding in euros. If, in fact, that law goes through, what's going to have to happen is they're going to have to buy twice the amount of gold that they're holding right now. That is going to keep juice, well, it's keeping juice under the gold market right now, but it certainly put a lot more juice underneath that market. This is Tom O'Brien. This is TFNN. You stay right there. Our Tigress Amy Smith is coming right up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, 1-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are aware that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on thefrontpage.com. Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally, 445-1044.
Welcome back, folks. We had the Dow Industrials finish up 7, NASDAQ up 41, S&P's up 5.5. And as we do each and every Monday at 20 past the second hour, we have our Tigress, Amy Smith from Investor Business Daily, as well as Investors.com. And, folks, if you haven't test drove either the newspaper or the website, you can get the newspaper 2 weeks absolutely free, or you can jump on the website 2 weeks absolutely free. The way you do it, come over to our website at TFNN. You can see that Investor.com banner. Hit the banner. Take your choice. You get 2 weeks paper delivered to your house and Investors.com. And if you're in a computer, folks, take Investors.com, because the bottom line, they have some great tools that are there each and every day that can help you. Amy Smith, what's going on?
Hey, Mr. Tom, well, it was so nice to meet you in person at the Vegas Traders Expo. That was great. That was was on Friday.
It was a beautiful thing, no doubt.
It was great. It's so funny for your listeners that don't know. So I'm going to go down to the booth and say hi to everybody, and I'm kind of walking in, and I looked to the right, and I said, I think that's Tom O'Brien. There he is.
That was cool. That was awesome.
That was fun. That was great fun.
There's no doubt. And I'm sure you had a great workshop on Saturday.
We had a great workshop. You know, interestingly, I think the biggest crowd was there on Friday.
Okay.
But we did have a lot of people that, believe it or not, they stayed, because I was right at the very end of the show. I was the last thing. But we did. We had a lot of people pour in, actually, and that's a nice group.
That's awesome. That is absolutely awesome. So what is the IBD take on the current market right now?
Well, what can I tell you? We have these closing highs on the Dow, and the S&P. We got the NASDAQ marching higher. You know, there's not a lot of actionable ideas. Okay. A lot of names that I can put out that I say, wow, in the growth stock arena, there's a lot of choices. That may change. Certainly, we can't say we haven't had any selling on the indexes that we would worry about. We'd call them distribution days. We've only had like a couple of those on the NASDAQ, one on the S&P. So there's not a lot to be concerned about, and yet, you know, I'm not seeing a lot of great, exciting stocks where I say, wow, these are fantastic setups, you've got to get in these.
Well, there's no doubt, you know, and I see in the notes, it's a little tricky, you know, because Friday we really could have went to the moon, and the bottom line is that, you know, you had the futures open up 20, folks, and normally when you're at highs and you know, it's like, okay, see you later, man, I'm taking the road to heaven, and you know, it basically stalled. So that is intriguing, no doubt.
Well, it is. It kind of, I think investors are saying, wait a minute, what kind of a market are we in? We sort of, as you say, we reversed on Friday, which was a surprise because earlier in the session, China had said, you know, they're going to have interest rate cuts. Today they came out and said, oh, no problem. If we need more stimulus, we'll put in more stimulus. And so obviously that is moving the market higher. And yet, as I say, with the, you know, in terms of the stock making great gains.
So talk to me about Foot Locker.
You know, this is another one. Talk about scratching your head. They reported earnings on Friday.
Okay.
They said the basketball shoe craze is continuing to, you know, they're going gangbusters. Just take a look at Nike stock.
Yeah.
Nike, take a look at that stock. But anyway, Foot Locker is operating at such a high level. You know, that's the only explanation because it was higher with the rest of the market on Friday. and it came down. The volume was very heavy. An analyst at Canaccord Genuity disagreed. He thinks that Foot Locker's positioned to continue to do well, but we have a CEO leaving. Ken Hicks has been there for a while, and he's due to exit December the 1st. Today, though, if you take a look at Foot Locker, it recovered, but not as much volume as we saw on Friday.
Yeah, and that's always a little dangerous when the CEO's leaving, right?
It is, and he's done a great job at the company, too.
Sure, and most times, well, I guess, listen, there's plenty of folks who like to go right out on top. That's the way you'd like to do it, there's no doubt, so...
That's what I would do. If you turned a company around, which he really has, since he's come on board, he's turned it around. He's got the shops look different if you go in them. The type of apparel they have in there look different. Certainly he's done a good job with the selection of shoes and offering a lot of things for women and for kids and to adult males. So he's done a good job, but he's out.
Yeah, and it's interesting, that whole, I think there's that big demographic that is after these baby boomers. Was not after them, but a couple. There's more people than baby boomers, so that whole cycle's going to start again, man.
It is. Yeah. It is, absolutely.
You get 5 IBD 50 stocks that may benefit from this China rate hike.
And I can't tell you even here, I wanted to put this in because this is sort of the topical story of the day. Because China's throwing out all the stimulus that, all the stuff that we did. Now China's starting to do it. None of these really look tremendously exciting to me, except NetEase is doing very well. But we need to watch them to see if these policies in China help the Chinese companies. One of them is BitAuto.
Yeah, I like the look of this.
Oh, man, this has been on the IBD 50 list for weeks and weeks and weeks.
Yeah, this is a good-looking stock.
It is. They had strong third-quarter earnings. They also had a successful Singles Day. That's the major shopping event in China, along with Alibaba. And they have a new PayPal-like service, and so the stock shot up. It's a place where you can go take a look at cars and car reviews. Interesting.
Yeah, it has volume at its high. The high that was generated out here was August, folks. You get a high-volume high at 98. You're at 87. Had a sign of strength last week, too, after pulling back on light volume. It's like, okay, the thing wants to go test it, at least.
It does. I think the only thing probably it has going against it is that it made a nice run. It's had a really strong run from its IPO debut, and from 2012, like the end of 2012, it's had a monster run.
Yeah, no doubt. Now, let's take a look at NetEase. I mean, this stock in itself, this has had a few extraordinary runs also.
Yeah, this one, and you know what? I'm not a gamer, so I'm probably a bad judge at this, but they have that popular game. It's all the buzz. It's Activision Blizzard's World of Warcraft.
Okay.
Are just huge in China. You can either play, kind of singularly, or you can play with a group. Multiplayer, you multiplayer competition, or you can play it by yourself. So it's really, really, really popular. It's not a new company, but having this particular game on it is very exciting, I guess, for people in China. And this one, too, if you take a look, it formed kind of a price consolidation, and it's just, boom, it's just moved higher out of that.
No doubt. So, you're in California, and I believe that's where Jack in the Box started.
Good old Jack in the Box.
Good old, and I'm sure you go there like 3 times a day.
Oh, absolutely, because it's healthy, it's organic, there's no fat in it. No, it's funny. Somebody was asking here in the office, have you heard of The Habit?
Oh, I haven't, no. But that thing went up like 40% on Friday. We were working, yeah, right.
So, we have to do research. We just had a meeting this morning, and so I got drafted to go, this is probably not the kind of food that I really want to go eat. But I got drafted in this. We're going to go to The Habit. It's a burger joint. They say it's a casual fast food. They say it's absolutely spectacular, but I will reserve that opinion after I go, if I survive the burgers and fries.
What's crazy, Amy, is that when I was stationed at El Toro, I lived with Jack in the Box.
Right.
So, and it's so funny. I bet it's still there. It's the one down in Laguna Beach, folks, and it's probably the best piece of property in all of Laguna Beach. But isn't that funny? I mean, I just love that place. Now,
somebody said, and I guess this is true. If you're going to spend 1,100 to 1,500 calories on one item, someone said that their food is much more delectable than like a McDonald's. They said if you're gonna pig out, go to a Jack in the Box.
Oh my God! I love it. Hey, listen, you have a great week, a safe week, a great Thanksgiving. We look forward to speaking to you right back here next Monday, okay?
Oh, you too. Have a good one, Tom.
Okay, have a great one. Have a safe one. You stay right there, folks. We're coming right back with our man Chad Coco from TD Ameritrade Thinkorswim.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished up 7, NASDAQ up 41, S&P's up 5.5. And as we do each and every Monday at 35 past the second hour, we have our man, Mr. Chad Coco. Chad, folks, has the best option show on the planet. It's right here every Tuesday, 12 to 1 Eastern Standard Time at TFNN. Now, you can get the program, you can get all the program at TFNN, folks, right on your cell phone. We go live programming 8 o'clock in the morning to 6 in the evening every trading day. On your cell phone, all you have to do is put TFNN.MOBI. If you'd like to see Tiger TV, just do TFNN.com. On the right-hand top side, you'll see Tiger TV. Hit that. You'll get the audio as well as the video delivered to you. If you have not test drove the Thinkorswim platform yet, come over to our website at TFNN. You'll see the banner in the very top on the side. You can hit that banner, bring the platform up. They will put paper money into your account. I use it each and every trading day, whether I'm trading options, equities, futures, or commodities. It's an outstanding platform. And just as when I was just talking with Amy Smith from IBD, I had the pleasure of meeting Chad also at the Traders Expo as he was out there growling and prowling at the TD Ameritrade Thinkorswim booth. Chad, what's going on?
How's it going, Tom?
It was great to meet you, man.
Yeah, likewise. Good to put a name to a face.
I know. Seriously, man. Now you're not an alien.
Good to hear.
I'm only kidding. I'm not. I know, man. No, I'm serious, man. Hey, and I dug those shoes you had, man. I'm telling you.
Yeah, thanks.
Yeah, seriously.
They're comfy.
Yeah, they're great-looking shoes, too. Hey, okay, so, Thanksgiving week. We're coming into Thanksgiving week. We're coming into Christmas, the holidays. I guess we're going to get a snowstorm. What do we look at coming into this, basically this holiday area, Chad?
But typically there's a lot of reduced trading just because a lot of the retail desks have their traders are off on holiday, so there's a lot less of that volume out there.
Right.
You do see some people covering their positions just to get their positions closed out for tax season.
Okay.
Make the taxes a little bit easier. But generally, there's not a whole lot of movement. The market's been going in a direction and tends to go in that direction. Kind of this week, so like numbers are usually spread across the week. Most of the numbers, like the Fed numbers, come out tomorrow and Wednesday as opposed to Thursday, Friday.
Interesting.
So
Okay.
a little bit more consolidation than that.
Right. And I guess once Thanksgiving is over, we have probably a few weeks before the end of the year, right, that we may get some movement, whether it's up or down.
Exactly, yeah. So after this week, next week, and the 2 weeks following that, we might see some movement, but after that, I wouldn't expect a whole lot going on either direction.
Now, you must pick up, I'd like to talk about the Las Vegas Traders Expo. What are the types of questions that you get asked when you're at that expo?
Yeah, it's kind of all over the board. So tomorrow I'm going to be covering some of the more interesting questions that I got out there, but a lot of it's a lot strategy-based. People who are not seeing the returns they wanted, maybe try to look at a different type of strategy on that.
Okay.
We also had a lot of questions on individual tools in the software, how stuff worked. But for the most part, it was pretty cut and dry. There's a lot of stuff that I cover on the show, so a lot of strategy-based type questions. Yeah, and then what we do on our side. Which
totally makes sense, because the strategies, folks, inside the option market, whether you're long a portfolio, short a portfolio, and the options strategies can enhance that, particularly coming into the end of the year. It's going to be interesting this year, too. There's no doubt between last year and this year, these accounts are going to be up quite a bit. And so I guess that's where people always fight to say, okay, do I want to sell this and take a profit, right, and pay taxes on it, or do I want to basically hedge this out just in case that we get a pullback and I don't want to lose that profit, right?
Exactly.
Yeah, because I'm looking right now. This has been a one-way market. Holy cow! I'm going back. Let's see, make it this straight. So we're in 2014. We started off the year. This year's right there. So we started off the year at 1767. Yeah, you're up 300 points, right?
Yeah, it's just almost a straight line up. It made a couple little dips here and there, but for the most part, straight on up.
Yeah, no doubt. When we take a look at the closing out positions at the end of the year, the bottom line is that, I guess, inside the option market, whether they're covering positions or selling calls, that's where, I mean, I guess if someone's long a couple nice positions and they don't want to get out of it, they could sell calls in that position and just hope that the market basically stays flat, right?
Exactly, yeah. So then lower your cost basis on your position by doing so.
Yeah. And is there any particular strategy that you've seen or that you've got questions on when you're at the Traders Expo in the last month, let's say, that people seem to be doing the same thing, or are they all different?
A lot of the same, or a lot of random strategies. There's a lot of people trading off of indicators on the charts, a lot more than I've seen previously.
Okay.
And then a lot of people trading with gaps on the charts was actually something I kind of do myself.
Yes.
So stuff along those lines. A lot of people just trading off the indicators, which is trading out more often than not.
Well,
it needs to be that way.
That's good to know, because what I was really looking for is that when you do get to highs that can't sustain themselves, that's when everyone is just basically doing the same thing. So it's having different deals out there makes a big difference. So listen, you have a great night. We look forward to the show tomorrow. You have a great Thanksgiving, and stay warm, because I think you're going to get a little cold spell with maybe a little snow coming in, right?
Yeah, so they say this morning I got up, it's 50 and rainy, and now it's snowing and starting to stick. So
oh, it is? Okay.
It's turning already.
Okay. Well, you be safe, and, we look forward to the show tomorrow, Chad.
Thanks, sounds good.
Thanks so much. Have a great one. Have a safe one. And, folks, the show is every Tuesday, 12 to 1 Eastern Standard Time. It's an outstanding show what Thinkorswim specializes in, what Chad knows upside down. I was watching him in person doing this, which is so cool. Is setting up strategies, and when they're setting up strategy, you're not just putting on green or putting on red. What they're setting up is that you're setting up a strategy, basically, whether it's a spread position, selling a call, selling a put, and if you are doing that specifically, if you're selling a call in particular, you'd be owning that stock. If you're selling a put, that'd be something that you want to be buying. And you got to make sure that you do want to buy it, because if it does come down to that level and gets put to you, well, the bottom line is that if you thought it was a good price at, let's say, 20, and you sold the put, and you sold 18.5, and you collect the premium, it comes down to 18.5. What you want to always make sure you're doing in that particular case is that you want to make sure that you actually did want to buy that equity. Because when you're setting up any of those strategies, if you have the aspect, it's just like even really selling a call. Well, if you're selling a call on an equity that you have, you want to make sure that you're not going to be totally flipped out if that gets called away. Because, of course, when you're selling a call on an equity, what ends up happening is it gets called away, you've collected the premium on that equity, and you get the strike price. Okay, so it's a good deal. You scored. Okay, there are many times that when a stock stays flat and you collect the premium and it doesn't pull back at all. Well, yes, folks like that too, because then you can resell that the following month. So check it out. It's tomorrow, 12 noon Eastern Standard Time, 12 to 1. Get it right on your cell phone at TFNN.com. And if you haven't test drove the Tiger TV yet, folks, do it. We have a brand new whole HD setup. The charts are absolutely phenomenal. You get the TV, video, as well as the audio aspect. Because what we do specifically is so visual, it definitely makes a huge difference as to what you're looking for, what our guests are looking for. And if you, the first hour, I did an interview with Greg Johnson. He's the CEO and president of Well-Green Platinum. What you saw there is that we brought him right in through Skype. You're going to be seeing that a lot more, so that we're going to be having these guests right with you. Let's go take a look at, let's see, PANW. Let's see what this is. One of our targets is saying, oh, this is Palo Alto Networks. This is a high flyer. That closed up $4.33. Right now, thanks, Terry, appreciate it. Right now it's trading at 109. That's down $5. Let's see what they have to say. Well, first let's look at that chart. So So she gave it up at the highs. She's going to come back $5, which is not the end of the world, because she was up 433 today. But let's see what they're saying number-wise. So number-wise, their net profit, let's see, adjusted net is $12 million. Their revenue is $192 million. The estimate was 12 cents. They made 15 cents. They see next quarter revenue from $200 million to $400 million. Now, bottom line is that they basically have pulled back. It's going to be interesting because there's a few other players inside the space, and let's bring a couple of those other players back, see what they look like. You got Checkpoint. There's one big. Is it Mobileye? So you got Palo Alto, Symantec. Oh, I think it's right there. Is it Spunk? SPLK. Let me look at this one. SPLK. SPLK. That closed at 66.96. That's still trading up there. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade real-time charts and full capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Let's go take a look at, first we'll go over to Asia. We take a look at Asia. Asian markets, no doubt. We'll go to the Nikkei first. Nikkei right now is trading out at a price point. So Nikkei is at 12,775, 778 rather. This has had quite an expansion, meaning going from a price point of 10,700 only 3 weeks ago. It's pretty amazing, actually. 3.5 weeks ago. So you went up, we're up 2,000 points. And, you know, what you do have is that when that broke topside on November 1st, you get juice behind the move. Nikkei, bottom line, you can get some pullbacks, but Nikkei wants to get and go a lot higher. And what that has to do with, the yen. The yen has weakened considerably. The yen's at 118.27 in correlation to that U.S. dollar, and that is marching up to the 124.14. And that's a long way from where we are right now. It only took 3 weeks for that baby to basically weaken in an extraordinary way. But I expect you're going to see a lot more of that. If we go over to the Hong Kong, we take a look at the Hang Seng. Hang Seng was up 456 points last night. That had gapped higher after basically gapping lower. That is still in a range that wants to get into the top of its range first. Now, the top of the range is, 29,900. So you're up, well, actually, we're almost right at it. You know, yeah, you can get to maybe 24,000, which is 130, which is a couple hundred points higher. But what it still is trying to do is go after this swing low that was created on the 3rd of October. Now, that's on the daily. We take a look at this and we put this on a monthly basis, and what you're going to see is that it's been having a tough time since 09 to basically get up into the 07 highs, and I don't think it's going to make it this time. That's the way that is set up at this particular point. If we go right into Shanghai, we take a look at Shanghai. Last night, Shanghai was up 1.8%, and what you do have is that the news coming out of Shanghai, and this seems to be this is the new mantra just about everywhere in central banks. Bottom line is that if the markets can't climb, they're going to help them climb up. Shanghai right now is at 25.32, and that took out the 24.44 last swing high, and it has the volume. The volume is extraordinary, actually. That last swing high, check this out. Last swing high at 182 billion, and we just did 420 billion. So, bottom line, this is going to be interesting watching this shake out. So Shanghai really can say, well, Shanghai is saying that it's going to make a run for 3186. That's a long way when you're talking about only a 2,500 indice, and that's 600 points higher. We go to the FTSE. We take a look at the FTSE, the UK. FTSE in the UK still hasn't been able to make its highs. The FTSE and the DAX in Germany look like the small cap, the Russell 2000. and it looks like it's not going to make it. So Europe is still in tough shape. We go over to the DAX in Germany. We take a look at the DAX. What we have in the DAX in Germany, that has been trying to get up to the high, and it's pretty close right now. It's 10,050, and we're at 9785. It had quite an expansion of volume on Friday. Today it just didn't do it, but what it is trying to do is test the 98.91 level. Our own markets, what you did have out here today is this. NASDAQ is over its highs. You can get higher price. S&Ps haven't tested the highs from Friday. I expect you're going to get that the next couple of days. The Dow Industrials, same setup. The Russell 2000 is still the wild card. And when I say the wild card, it just can't handle a higher price. It's going to finally test the highs that were generated in November, which is November 14th, which is 1177. Hold on one second. No, it's 1188. We're 1186.94 right now. The actual high in the Russell, however, is 1213. If we do that correlation inside the IWM, what you're going to see is that the IWM went up $1.39 today, did it with 24 million shares. That swing point at 118.25, that's going to get tested. That only had 25 million shares. The actual high in the IWM is 120.97. What I do expect you're going to see, somehow this thing wants to test at least the low of the high. We'll see whether it can get into the high itself. Dollar index is that today what it tried to do is get into the 2010 high. That number is 88.81. We got to 88.53, I believe. Hasn't tested it yet. It looks to me that it does want to test it. For the folks in the metal market, what you do have, and this is a big positive, is that on Friday, dollar goes topside, S&Ps are up 20%, 20 points rather. They couldn't push gold into a lower price point. Today, dollar index also was going to a higher high. This is pre-market. They still couldn't get gold into lower price points. That's saying that gold is building a nice base, it's building cause, and it's building cause for higher price. What we are going to see out here is this Switzerland vote at the end of this month, which I believe is 4 days from now. Friday, probably. Yeah, it's Friday. So that vote in particular is going to be a big number for support and or basically not support of the gold market. What that vote is all about is that if, in fact, the reserve requirements in Switzerland will go that as they are buying euros, what they would have to do is that the Royal Bank or Bank of Switzerland, what the Bank of Switzerland would have to do is supplement euros with gold. And the way that the analysis is done thus far is that if, in fact, that vote gets put in by the citizens of Switzerland, the Swiss bank itself will have to basically double up on the amount of gold that it's had. And what this is specifically about, I wouldn't say this is specifically about the assets, folks, value of gold. The Swiss have always been smart in the context of monetary policy. What this is about is that the bank itself, so the way the European Union is set up, is that the bank itself has to keep so many euros in reserve currency. And what has happened, of course, is that the euro has gone down substantially. And the citizens are looking at that and saying, hey, what's going on here, okay? We are sound money people. We're not going to can the euro, but what we do want you to do is that you're going to buy as much gold as you are euros. That's what it's all about. So this is Tom O'Brien. This is TFNN. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. And if you're traveling, folks, please be safe. Go get them, folks.